Now journalize the following transactions. Now students, here we are going to understand how actually the entries are made. Now the first transaction here is received from Ram rupees 50,000. So now let us first of all analyze the kind of accounts that are involved here, their nature and how the rules would be applied. So for first transaction, received from Ram, what would we have received? We would have received cash. So one account involved here is cash account. Mind it, it is just your working here. We are receiving this cash from Ram. Now students, we must understand and analyze what is the nature of these two accounts. Cash is an asset, so it is a real account. Whereas Ram, it involves a name, it is a personal account. Now let us understand whether they would be debited and credited through traditional rules. Now students, under traditional system of accounting, personal account, the rule was debit the receiver, credit the giver. I just repeat, debit the receiver, credit the giver. So we are receiving from Ram, that means Ram is a giver. Ram is actually a giver. Since Ram is a giver, his account would be credited. Correspondingly, cash is a real account. The rule for real account is debit what comes in, credit what goes out. Since cash is coming into the business, since cash is coming in, it must be debited. So students, it is very clear that cash would be debited and Ram would be credited. So how this entry would be shown? It would be shown as Ram, it would be shown as cash account debited. The account which is debited is written on the top, and in front of that write DR. DR shows that this account has been debited to the credit account. That means the account which has been debited will appear on the top and the amount which has been credited will appear at the lower side of the transaction or the entry. Now students, cash account has been debited by rupees 50,000. So in front of cash account, in the debit column we will write 50,000, and in front of Ram, in the credit column we will write 50,000. We must make sure and we must verify also that the amount in the debit column is same as the amount in the credit column. So now students, what we did was we identified the accounts. The cash account and the Ram account were involved here. The cash account is a real account by nature and Ram account is a personal account by nature. By applying the rules, we found that Ram is giving, so he is a giver. The rule of personal account says that the giver should be credited. So Ram was credited and cash was coming in, so it should have been debited. So debited means cash account debited to Ram. Since the dates are not given, I'll just mention the serial number here. Now students, every entry or the journal entry that we have made has a narration part to it. The narration means it is actually a summary or it's an explanation of how and why this transaction has been made. It always starts from being. So we'll write being cash received from Ram. This line makes it clear that this entry was made because Ram has paid us certain sum of money. Now let us come to the second transaction. The second transaction is sold goods to Anand. Here we are selling goods and the goods are being sold to Anand. So for classification part, there are two accounts here. One is Anand, to whom we are selling, and the other account is sales account. Students, whenever goods are sold, sales account is used, and whenever goods are purchased, purchases account is used. So now in here, Anand is the name of an individual who is purchasing goods from us. Since he is purchasing goods from us, it is actually a personal account. By nature, it is a personal account. Sales is an income for us. It should be classified as nominal account. Now students, the rule for personal accounts. The personal account rule is debit the receiver, credit the giver. According to this transaction, we are selling goods. That means Anand is receiving the goods. Since Anand is receiving the goods, Anand is a receiver and hence should be debited. So Anand should be debited because the rule clearly says debit the receiver. Whereas sales is an income for us. Since it is an income, the rule for nominal account says debit all expenses and losses, credit all incomes and gains. It is an income, so it should be credited. It should be credited. So now it is very clear that Anand would be debited and sales account would be credited. This entry number second would appear as the debit amount account on the top, that is Anand debited to sales account, and the amount is 80,000. In front of Anand in the debit column 80,000 and in front of sales in the credit column 80,000. What about narration? This entry has been passed because goods have been sold to Anand. So we'll write being goods sold to Anand. Coming to the third transaction, students. The third transaction is purchased for cash. Obviously, what we'll purchase? If nothing is mentioned, it is purchased goods for cash. So we are purchasing goods. Whenever goods are purchased, it is the purchases account that is affected. And since it is being purchased for cash, the cash account has been affected. So the two accounts involved here are purchases account and the cash account. Purchases account is a nominal account. It's an expense. And the rule for nominal account is debit all expenses and losses. Since it is an expense, it should be debited. Coming to cash, cash is an asset. Since cash is an asset, it is a real account. And as per the rules of real account, debit what comes in, credit what goes out. Since we are purchasing, that means we are paying cash. That is, cash is going out. So according to rule, credit what goes out. So now it is clear that both the accounts, purchases and cash, out of these two, purchases would be debited and cash would be credited. So this entry would be written as purchases account debited to cash, and amounts are 25,000 for debit and 25,000 for credit. The narration is being goods purchased for cash. So now students, it is very clear that we must first of all try and identify the two accounts that are involved, their nature, and then apply rules accordingly. The account that will be debited is written on the top and the account that is credited is written on the lower side of the transaction or the journal entry. The amount on the debit column should be corresponding to the debited account and vice versa for credit. At the last, we must total the journal so as to make sure that the amounts are equal, because debit and credit aspect should be equal. So here the total comes out to 1,55,000 rupees and it is equal on both the sides. So we must close it by making a double line at the bottom of the amounts column.